recording. So again, thank you all so much for joining us. This is my third time recording this, and hopefully nothing will go wrong in this session. But I am doing this meeting to hopefully answer some questions concerning estate planning, as well as the balance sheet and any other tax topics that come up during this particular meeting. And as you all know, I try to provide you with educational tools to help you to prepare for tax season, but also organize your business properly, as well as your estate. So I have a couple people joining late, some people watching the recording. So if you're watching this later, you can definitely feel free to join us on the next live meeting. I would say in the next 2 weeks. But for this meeting, I'm going to get started with estate planning. I had a few clients that talked about, Donald, I'm going to get started with estate planning. And a lot of times I have to prepare you for a meeting with the attorney. And I'm going to give you sort of a heads up guide in terms of like helping you understand what an estate plan looks like. And the attorney will make a decision with you to basically determine what's a best fit for you. But I'm just giving you sort of some guidance to help you understand what it could look like just from a general perspective. So I'm going to go into my whiteboard and you should be able to see my screen. And I'm going to give you sort of a roadmap of what it looks like. So I have people come into me and say, Donald, I set up a holding company. I set up this LLC or whatever. And many times I look at it and it is wrong. And so we're going to start with, you know, an LLC here. This is what many people end up having, or Inc., INC, or something like that. So, you may own a house or you may be renting or whatever the case is. But most often, the question comes up, when should I have a trust? Or I'm interested in having a trust. So the trust is basically the foundation of your infrastructure or your estate plan. And the trust is a very powerful entity. When I say that, I'll give some more concrete details. This is not going to be a one session discussion about a trust and estate planning because, as you can imagine, it's very complex, and there's several things that could come up, pertaining to setting up your estate plan. But a trust is basically the foundation. Why I say it's very powerful, let's just say, for example, if you owe money to the IRS or to a bill collector, for example, and you put all of your business, your information into a trust, the trust can basically avoid having to pay those bills because the trust don't owe taxes at the time, something happens to you. And so the trust is basically an instrument to leave your assets where they should be, leave the money where it should be instead of being dispersed to bill collectors and there's nothing left in your estate. So the trust is a very powerful tool, and this is one reason why it takes an attorney to make sure that it's set up properly, especially when it comes down to your assets and your businesses. And you might say, well, I don't have anybody to leave it to. Well, that's a whole nother discussion that you can speak to the attorney about, and she can give you some guidance, or he can give you some guidance in terms of what to do with those assets or that business or, whatever that you are leaving within your trust. But ultimately, that's one of the benefits of having a trust. So when we design it here, there's a line that separates the operations from your assets. So on the left side here, we will have your operations. And if you can't see something or you don't understand something, please feel free to stop me. I don't mind giving more context details. You have your assets here. And so in your operations, you have your LLC that's registered at the state. A lot of times, many people don't have that LLC properly documented because they let the annual report or the annual filing lapse. In other words, you're not paying your annual fee to keep that LLC operational. In some states, you can have it set up for 2 years that you don't have to pay the annual fee. So it just depends on the state you live in. But I know Georgia is one of those states you can elect to have it every 2 years or 3 years, I think. You just pay extra for it. But in typical states, it's normally annually. And so, your operations, you want to make sure that LLC stays in good standing. Right now is the time to take a look at that. Because I know for Maryland and North Carolina, this is due now, is in that period or that time frame that is due. Without that LLC, you're open to perhaps lawsuits that could impact your personal assets and or your personal property. You don't want that to happen. So that LLC provides a veil of protection so that if anybody did want to sue you, they could not come after your personal assets. Okay. Then you could have your assets here. You can have a house, you can have real estate investment properties. And sometimes people think that their personal residence is an asset. And it's not. Your personal residence is technically here
Yeah.
with the net trust. And so we'll call this PR for personal residence. And so basically, it's not an asset unless you're making money with that house. But typically, with the personal resident, it is not an asset. If anybody have any questions about that, feel free to ask. I have a couple of people that's on here that do real estate. Darren Hungerford is my go-to lender. Shout out to Darren Hungerford because he understands working with small business owners and helping you get qualified for a mortgage, where a lot of lenders are unable to help entrepreneurs get qualified. He's a key person I go to. And I can't tell you how many times I've had to go to him and say, hey, I have this client that needs your help because this lender told them they couldn't work with them or they're giving them a really hard time, really hard way to go with getting qualified. And some of the real estate agents that's on here as well. There's Tracy, she's here, as well as Nikki. Thank you all so much for joining. And so they've seen it as well. And then you have Johnsy. She is Miss Cherry on Zoom, and she has a real estate investment property. It's a multi-unit. So a lot of people here that understands real estate. But this is how your estate plan can look like. Whenever you're thinking about estate planning, you have your LLC and you're like, Donald, I don't want to pay that much money in taxes. Well, let me go back over here to the assets because you have a real estate investment property. That real estate investment property is important to put it under LLC. I've seen it where people had this investment property in their personal name. What happened when it was in their personal name? Someone got bit by a dog and, of that property. So the dog is in this house and, a neighbor got bit by the dog. So then they want to sue the owner. And I told my client, who is the owner of this property, I said, you should have an LLC. Before this event happened, and she's an older client, and it's unfortunate that she was being sued or she's being sued by the resident in that community as well as the real estate agent. For some reason, I don't know, but the real estate agent was acting as the property manager. So they're suing the property manager, who is the real estate agent, as well as the owner of this property because it did not have an LLC set up. So I really share my empathy with this client, but I was hoping that she would have set this up before before it got to that point. She's like, I give up. I don't want to do this anymore because I just, it's a headache. And I'm like, I totally get it. So this is one reason why it's important to have this set up properly. And then, when you're thinking about taxes, I don't want to pay a whole lot of money in taxes. Don't know how can I save money in taxes? How do the rich do it? How do the wealthy do it? And this is part of what they do. The attorney can set this up where no one will be able to find you. But if this over here, your operations is jacked up, a mess where you have receipts all over the place, or you don't know where your profit and loss report is, you don't have a clue what that looks like, or your balance sheet is in disarray, it is not a good look to help with setting up your estate plan. In other words, running a business is not for the faint of heart. And I can say that again. Being a business owner, running a business is not for the faint of heart. Meaning there's so much in, when it comes down to running a business. And I'll veer off a little bit of the estate planning topic a little bit just to give you sort of an understanding of running a business. You have sales, you have marketing, you have business development, customer service, where you following up with clients and, you have administrative items that need to be done. You have training that you have to do. You have accounting, you have taxes, you have so many aspects of running a business. It can be a lot trying to narrow down operations and doing estate planning. And I'll give you another example of something that I ran across. I run across issues all the time. And you all can feel free to chime in if you have questions or just want to add a comment. But I've run across this so many times where somebody is selling you on being your business coach or mentor, and they want to set up your business, everything's set up. And the next thing you don't know where your EIN letter is. You don't know how to file taxes for this business. I've seen it where someone did not file taxes and the IRS said that the tax filing is missing. And depending on the type of filing you need to do, you can be charged $500, $3,000 penalty for not filing. And let me just give you this on the side. What could be those reports or those tax filings that could cause such a balance? Oh, that could be your 1065, which is a partnership, or your 1120S, which is your S corp, and maybe possibly your C corp 1120. So it's very important to get these files in on time. So these are due March 15th, and this is due April 15th, unless they change the dates because of the weekend. Sometimes the weekends, the dates fall on the weekend and they'll move it to Monday or whatever. So we know that. But these are very important to file on time. So let me give you some additional notes about estate planning just to kind of like share with you some details. So I hope you're taking notes. But estate planning includes building, preserving, and distributing. Building what? Building the estate, preserving the estate, and distributing the estate. Because apparently when you build, you want to then preserve it, and then it's hopefully you can distribute it to somewhere, something that you want to distribute it to. And that's where, for example, what's included with estate planning, it includes a will, living trust, insurance, deed, so many different things that you will include in an estate plan. And as part of that team, you have your attorney, you have your accountant, even an insurance agent, which I'm licensed as an insurance agent as well, and could also include a financial planner. So we work together as a team. So anytime I have a client that wants to set up an estate plan, I'm there with the attorney to help support the process. And so that would include looking at your books, looking at your business, making sure all of that information is set up right. So what do I normally do when I talk about estate planning with the client? I'll say, listen, to prepare you to meet with the attorney, I need to know what all your LLCs are. I need to know your EIN letters. Where are they? What are your bank accounts? Everything, like even your personal assets. Like what exactly do you have? So we can make that proper introduction so you can be ready. Let's just say, for example, you have a particular situation where maybe there's a divorce on the table. The attorney typically will not set up your trust unless you and that spouse are on the same page. But if there's a likelihood of divorce, if you're working with the right attorney, they cannot or will not set up a trust because it can appear as though that you're being petty towards your spouse. So even things like that, so it's good to know that your spouse is in on it. If you have someone that says, I want to set up an estate plan and setting up a trust, you want to make sure like, hey, that, we're all on the same page. And that's something I do with my clients, with all of you. If any of you come to me, I'm, examining that as part of the conversation. So do you all know what the probate court is? Do you know what the probate court is? Just to
Yeah.
kind of get you all talking, what is that?
When someone passes away, they have to go to probate to decide who's going to get what. And if I'm not mistaken, I think they normally deal with the executor of the estate.
Yep. Yeah. So they oversee the executor and they basically interpret if there is a will. They'll look at what the will is. And many people think that it's enough to have a will. The will is contestable in court. So it can be contested in the court of probate and meaning it could be challenged. And so that's why having, if you say, well, is a will enough? Is not enough. With a trust, you have a firm allocation of what you've already decided that those assets or where those assets should go. And so the court cannot override the trust. So having a will is not enough, even though you can still have a will, but it's more like an addendum to what you put into the trust. Okay. So the executor is basically, it could be, well, there's proper terms for it. Executor is the man, or executrix is a woman. Don't ask me why they changed the terminology for it, but it's designated by the will to manage the assets and liabilities of the person that passes away. Normally the executor is the surviving spouse. So basically, it's like, you're automatically the executor because you are the surviving spouse or close relative. So a lot of times, if the executor was not already appointed by the will, they'll automatically identify who the executor should be based on the relationship. And being an executive is basically time consuming and complex. So I have people that end up being the executive and they don't even know what to do. So they'll reach out to me and say, hey, Donald, what should I do about this? What should I do about that? It's almost as if this is like a last minute call. But we should already be thinking ahead of time. Even if you say, well, Donald, I'm not ready to form my estate just yet, but I do want to have conversations. This is the beginning of that conversation. This is the beginning where you say, well, listen, let me think about this now because I don't want to wait till later and it's too late to even talk about it, or thinking that you don't have enough to even put inside of a trust. Some people think, oh, it's not time yet. Oh, I don't have anything. And I'll tell you this, that even you could talk to different attorneys, just like you can talk to different CPAs. You're going to get different responses. And how do you know that you have the right response? Well, first of all, attorneys that will turn you away from setting up a trust, they have their hands in probate where they get paid based on the person that is leaving things behind because they're charging money for it. So they'll, it's in their best interest to say, don't set up a trust or you don't need a trust. Don't worry about estate planning because they're going to get paid through probate. Anybody is a witness or can testify to that particular situation happening to them? Maybe not, but I've seen it happen over and over again. The duties of the executor, basically, they locate the will and file probate petition. You might be like, why are we going over this? Because I want you to be ready for just in case to have this discussion. They collecting a life insurance, they finding cash, bank accounts, inventory of personal items. This is a lot of stuff to go through. Pay or collect debt. So they're trying to figure out who they need to pay. Arranging for out-of-state administration. repairing and maintaining assets. They're doing a lot. And, you know, someone being left with somebody's estate can be very challenging, especially in the time of grieving. So the IRS, where do they fall in line with this? The IRS is an interested participant in this process, whether it's, the federal tax return, which is a 1040. They also will get an estate tax return as well as an estate income tax return. I had people come to me about that as well. If there is a trust, um, if a trust has been created during your life or at death called a testamentary, there will be a trustee named in the trust agreement to carry out the terms of the trust. Family members, the most immediate duties arising from someone's death often fall on the shoulders of those family members. They have to deal with the practical and necessary tasks created when a loved one dies. So, in other words, it's to our benefit to map out that plan now. So, when you have a business, you basically adding to what that estate plan could include. At one time, it's just we had just W-2s and just W-2 income is nothing complex. We didn't own real estate property like that. It was very simple. Now with having a business, the question is your business something viable to leave to your loved one? Do you want to just start your business and keep it and, let it pass down to your relatives? Or do you want to close your business upon your exit from this earth? Now, just from a talking point, I'm going to pause the recording just so we can have a dialogue recording, just so I can pick up on that. So it's very important. So restarted the recording for those of you that weren't a part of the little break here, but I wanted to have some interaction. Why it's important to set up your business. So many people started a business, and I think that we don't really take our business as serious as we should, or we don't look at it from a perspective that somebody else is going to have to pick up the pieces if something happens to us. So estate planning is very important. Establishing long-term relationships is very important. Let me give you an example. So I went to Florida one year and was sitting in a hot tub with a Caucasian family, and the mother said that their close friend is an accountant. And it's not so much that that was the like they're close friends like that, but they made friendships with this accountant from the perspective, if something happens to me, my kids already know to contact the accountant. Why? Because the accountant knows where the finances are. Also, contact the attorney because the attorney knows where the trust is and how to execute things once things are, are moving forward in that direction. So what we want to do, and I would say with me, with my clients, I really do take your life, your family, your business to heart. I really want to make sure that I'm in a position to help you as much as possible. And so when something happens to any of my clients, I take it personal. I look at it like, how can I be supportive of you at this time? And because we all go through different stages of our lives, and I want to make sure you know that you got somebody that you can count on, and to call the IRS if necessary, or the state to help deal with those challenges. But the other part of that discussion, I said, well, let me get into estate planning with you all to get you having that discussion. Let's start talking about it, so that way when you talk to an attorney that I can recommend to you, that you're ready with your stuff in order. So let me go through a couple of things that has to happen upon death. So we don't want to deal with this, but this is one of those trainings that even I have to take as a tax professional. I got to take it. So if I have to take it, let me share it with my clients. Some of the things that you have to consider when death occurs is notify the funeral or whatever, the institution responsible for removing the body from the hospital. So if that's me, I'm going to use myself as an example because I know that we don't want to think about this stuff in it is what it is. But my kids or somebody would have to take me from the hospital, like, or wherever I am, and call them and say, hey, come get that person. I obtain to begin to implement any instructions that I left regarding my disposition, including, gifts or special funeral arrangements, whatever the case is, contacting the religious officials, those that want to, that I have appointed to lead my service, or if I'm going to be cremated or whatever, locate my will. But they shouldn't have to just locate it. They should know where it is. My estate plan, the trust, they should have all of that information. The executive should select and or contact the estate lawyer. So I already have someone I work with, so they already know to contact that attorney. Notify the immediate family members. So, notify close friends and employer or whoever all should be notified. And even the accountant, like contacting the accountant. So someone that decides to change accountants, make sure your family knows, hey, I'm working with such and such as my accountant. They got my financial data. They know my books. Let them know this is who I'm working with, because that shouldn't be a secret. They know my tax files. They know my business. They know all that stuff. So you want to make sure you build those relationships. Also decide on the appropriate memorial for the descendants, and notify acquaintances of anything. Prepare and deliver obituary and all that stuff. All the little stuff that we don't want to think about. But then also we want to look at telling the post office about the mailing. So where do the business mail go to? Where did the business mail go? Is the business renting a facility? Like, does the business rent, like, let's say, like, for example, with Regis, are you renting from Regis? Let your family, whoever you're passing things down to handle this, make sure they know who you're renting from. And Laura, I see your hand. Tell me, you can feel free to ask your question.
Yes, I wanted to say I do appreciate this very good information, and I thank you for doing this because, being in insurance, a lot of it is familiar with me. The past 3 years, I've done a will workshop, and I would tell people, most people know about insurance, whether they have it or not, but a lot of things, like you said, probate, a living will, durable power of attorney. Why are these things important? Even down to, and I did have an attorney that came and was able to, assist people with getting trust and why it's important because average people, even though we may be doing business or self-employed, we don't know. So I do appreciate this. But there was one thing I wanted to add, and the actual attorney told us this. He said, make sure you have a beneficiary on your bank account because a lot of people don't realize that. And if you have a beneficiary on your bank account, if something happens, you just go to the bank with the death certificate and they'll give you a cashier's check then. But if you don't, then it becomes part of the estate.
You're
And that was
exactly
something
right.
that we didn't think about. The attorney actually told us they had to learn that from losing a loved one that was, proactive enough to be the beneficiary. And when they went in just to close the account, they said, "Oh yeah, well we can give you what's in the account, but otherwise they wouldn't have been able to."
Yeah, that's one of the key points. I'm glad you mentioned that because it is a good point to make sure that someone else have access to that account. And that includes business because again, we set about business accounts and we only the ones that have signage on the account. No one can access that account if something happens to you, and therefore they would have to prove that they can take money from that account. And yeah, so that's so important. So thank you, Laura, for sharing that. Yeah, this is one of those conversations again that's very necessary, and you know that we want to take more practice steps to plan for just in case. It's not to say it's going to happen today or tomorrow, but just in case, what's going to happen today if this did happen. And this is why, and I would say just overall, like when we get into, organizing your business, I'm gonna say this, just in terms of being a business owner myself, that we really have to get a handle of running our business. And I see you, Cindy, and I'm gonna make one quick point before Cindy speaks, but it's so important that we take active steps to monitor our business. And it seems like we are, overall. And I would say with my clients particularly, you all are not in the 95% category that I've seen over time, but at least 95% of people that have a business, it is jacked up. At least 95%. Cindy, would you like to say something?
Yes, I was going to say I had experienced this with one of my clients. I was helping them with probate and just getting everything started in probate and getting the house sold. And the deceased, he did have one person as his beneficiary on his bank account. But what happened, I would like to ask this to the person who has the insurance person. I thought that it was always good to maybe have more than one person as a beneficiary because that one person that he had on his beneficiary, he he took all of the money out of the account, and of course he was on there as the beneficiary, but there were seven other heirs to the estate, and he didn't give any of them any of those millions of dollars, not even his parents. And so now I look at it different. I'm like, maybe we should have at least two beneficiaries on, especially if you have children. Maybe not just have one of the children, but maybe have, at least two of them so that the one isn't, just taking everything. So I just thought I'd point that out because my clients they felt a certain way about the person who was listed as the beneficiary. I think the brother thought that the other brother would split the money amongst the other heirs, but he didn't.
That's a good point, Cindy. I'm glad you mentioned that because you see like the Tyler Perry movie and they waiting for the will to be read. But it's after the fact, is once that person passes. This is one of the reasons why I'm sharing this now because we should take a proactive approach now to evaluate those relationships. And like you said, having multiple beneficiaries, that's something that we should consider now. And, if any family member have any challenge, any problems, or say, hey, I don't think that's the right decision, we can hear that while we're alive. Otherwise, once we're gone, we're gone and that person does whatever they're going to do. But I think the other part that adds additional complexities with this is having intellectual assets like business. When you're building a business and you have, let's say, you have that residual income coming in. Who has access to that? Who can spend that money? Who can allocate that money? Having multiple beneficiaries on that bank account definitely could possibly. But then what if they're at odds with at each other? One say one thing. That's why working with an attorney that understands estate planning can be very beneficial because they can bring all of those dynamics into the picture. Even
John, I have a quick
including, go ahead.
quick question. Have you partnered with any estate planning attorneys in Maryland yet? Because I have a really good one.
Yeah, so
Okay.
Shakira is one that anybody asks me for one, I'm going to recommend Shakira. She's one of my clients. And
Okay.
also there's another one that I won't name on here particularly, but yeah, she is also one and I have a nonprofit attorney that understands estate planning. So yeah, they all have their own skill sets and
Hmm.
um and based on their availability and the things you may be looking for, I might, refer accordingly. The
Hmm.
problem is, and I'll tell you one of the challenges of today is that people will go to LegalZoom and they'll compare prices. Well, LegalZoom charge this. LegalZoom don't know you.
No. Right.
And I've seen it when LegalZoom set up people businesses wrong. And I'm like, I'm not an
Yep.
attorney, but I'll do this. I'll refer you to the attorney and let that attorney tell you because I'm not.
Hmm.
I don't want to compete, with what you believe this LegalZoom person told you that is supposedly an attorney versus one that is familiar with the law that you can actually talk to. I
Mm-hmm.
don't know.
Mm-hmm.
Cindy, did you have your hand up? I wanted to make sure it was up. I didn't know if you wanted to add something else to that.
No, I need to put it down. So
I got you. Okay. I got you. Yeah, so this is one of those important conversations, and this is just the start. We're not even well over into the ultimate discussion, but I'll just share with you my screen once again what it looks like to start preparing for estate planning. And over here, like I said, there's operations on the left side where you have your LLC. You can be treated as an S corp. You can be a disregarded entity, whatever that looks like for you. And I included receipts and balance sheet on here just because I said sometimes this stuff is not in good order, but it's important to have this stuff in order. And then on the right side is assets. Included with assets is like real estate investment property, not your personal property, but investment property, insurance. So if you have life insurance, that is an asset, as well as retirement accounts like IRA, 401k. And any annuities. So anything on the asset side, gold, silver, those things are tangible assets. If you invest in oil, that will be an asset as well. Again, operations is where you're making money, and the asset side is where you're investing your money. And you can still make money in real estate as a real estate investor, but it's still treated as an asset. If you're renting a car, because we have people that's in the Turo business, renting a car
Mm-hmm.
through Turo, that could be another area that you have your assets included. At the bottom, where I have the trust, this is like the foundation. Why? So if someone knows a trust, or you can take a guess, what would be the reason why a trust is very important? What would be your one reason why you would say, you know what, a trust is very important for estate planning?
to
Avoid
protect
taxation.
assets,
Cindy, what did you say?
protect your assets.
Okay. Laura, what would you say?
Avoid taxation.
Both are very powerful responses and they're good. Yes. Protect your assets and avoid taxation. Who would not want to trust? So if you owe 30,000, which some business owners do, unfortunately, even retirees, they owe like 20, 30. Some retirees owe 50, 100,000 to the IRS. Why would I want my assets being subject to taxation if something happens to me? I leave nothing to my family at that point. So some of
Mm-hmm.
us have older relatives that perhaps the attorney said, oh, you don't need a trust. You don't need to worry about setting up estate plan for your older relative because everything can be done for free. We got it. That's because they're going to get paid at probate. That's
Mm.
Go ahead, Latar, you had something to say.
No, I was like, oh, light
Yeah.
bulb moment.
Yeah, so they'll do it for free. They'll work with you for free. So they don't charge, but they have their handout at probate because they get paid through probate. I put the personal residence down below here, and we'll get into more complex discussions about this. And this is where you should sit on the edge of your seat because I'll tell you, for example, I will not buy another property in my personal name ever again.
We talked about that.
And I'll explain why in our session in the next couple weeks.
Mm-hmm.
But it just requires more details. But you have to make sure you're working with the right team members, your accountant, your
Mm-hmm.
attorney, and your lender.
Mm-hmm.
But
Mm-hmm.
I will ask this question. Darren, out of your years of being a mortgage broker, have you ran into that where someone put their property into a business versus their personal name?
No, I haven't ran into that too often, just when they're purchasing rental property.
Okay.
That's the only time.
Yeah. This is going to be a nice one that we go over. But the personal residence would not be considered an asset. Does anybody know why a personal residence is not an asset?
Because it's
I
a
always
liability
wondered
as
that.
well.
You're right,
Because
Darren.
You're living in it. You're
You're
the
living in
owner
it.
occupant.
Yeah. Now, if you choose to, I'll give you some of you because you're familiar with real estate. So Miss Cherry is here. Jossie Cherry is on here. She has the business Girl You So Dope, but she's a real estate investor. And she has a multi-unit property that she's actually renting several units out to tenants, but she also lives in one of the units that she would consider is her personal residence. So, John I see your comment in the comment section. But John would you like to share your experience of being a multi-unit investor?
As far as what, Donald?
The experience has been because some people like, look, I don't want to share part of my house with another person. Like, how has that experience been for you?
It's actually been pretty good. With the exception of the initial issues that I had with the realtor and the contractor. Once we've gotten in there, it's been absolutely amazing. I mean, we prayed for peaceful tenants. That's what we've gotten. We treat it more as a community, so I have absolutely no issues whatsoever. I do currently now have one unit vacant, well, because somebody just applied for the other one. But I love it. Once my property is occupied, I'm basically living rent free, so I can take my income, my personal income, and invest in other areas. So I absolutely love it. I think it's the best. I think
Yeah.
everybody should do it. It's the
Mm-hmm.
first property. If they don't already own a home, I think your first purchase should be a multi-unit property.
So Darren has a question. He said, how many units?
Four.
Mm-hmm.
Four, and Darren, I actually converted the basement into where I live, so I'm actually renting out all 4 units in my building.
Mm.
Yeah. So
Good
now
for
what she
you,
did is
girl.
she
That's
made
good.
her Yeah, so what she did is she made her property, which could have been all liability, she made a good portion of it into an asset, you know? Um, I'm still warming up to that idea because I'd be like, look, I'm just a renter here, just like y'all, okay?
Well,
I'll be out the back door.
only
There'll be a
two
private
know.
garage for me.
Only two individuals know that we're the owners. The all the other ones we now have a property manager. So everybody else, I'm just Miss Cherry.
Mm.
Yeah,
Nice.
yeah.
Don't be knocking on my
Gotcha.
door talking
Yeah, do
about,
not knock
hey,
on
the
my
water
door
is
for
cold. Nuh-uh.
anything. No, no, not anything regarding this building. If you want to knock on my door, hopefully you don't need to borrow any sugar. But but everything else, no, don't contact me at all. I'm just like you.
Exactly. Cool. So I thank you so much, John C, for sharing that. Cindy, your hand is up.
Yes, I am working with a buyer who is about to purchase a multi family unit as well, and he's going to be living in one. So thanks for sharing that. And I would love to connect with you just to get some insights on how the process was for you.
Oh, absolutely. Absolutely. I'll drop my number in your to you.
Awesome. See, we love connecting.
Yes.
And while we're connecting like this, I would shout out Latara because she has a credit business. So she runs across a lot of this as well. And that's one of the areas that I'll touch on as far as the balance sheet. Many times we don't realize the power of the balance sheet. The balance sheet is something that will help us to get funded. And I've seen this over and over again with challenges in having the proper balance sheet. In other words, your profit and loss is where you're showing you making money and you have expenses. But your balance sheet shows what is in your bank account. And some people say, Donald, there's nothing in my bank account. But on the flip side, there may be loans. You may have a loan in your bank, that's on your books. And if you don't have the loan in your financial report,
Mhm.
then we're missing out on potential of you getting more funds. Tracking that information. And I'm just touching on this very briefly because I've done a lesson on balance sheets, but I just want to remind you from a funding standpoint why it's important to have um, your documentation in order. So your balance sheet could also include accounts receivable. How much are you expecting to receive over the next month? Let's say, like, for example, if you're expecting that you're going to get paid 5 grand, that's an asset. And when a lender look at your business overall to do a valuation of your business, are you someone that we want to loan to? That could be, your golden ticket to getting funded. So not only is your profit and loss report valuable, but your balance sheet adds even more value. I just wanted to touch on that very briefly, but this conversation can definitely get into some deep discussions or deep dive in terms of how we're managing our business. I think overall, I want to just make sure the key points are shared once again. Proper estate planning does not stop today. It's actually something that you just want to consider as more like lifetime. Something can change. Heck, relationships change. Your business could change. So things like that, you want to make sure you take into consideration. Having an attorney, having your accountant is very important as part of your estate plan. Why is that? Because we have your information. I can't tell you how valuable your information really is. Your social security number, your birth date, your financial records, all that type of stuff is very important. And knowing you're partnered with the right person, you hear me say partner, because I look at it like this. You're all my partners. If I need something from you, or need to send a client your way, I need to refer somebody to you, or I just need to give a good referral. Guess what? We're here together. Some people ask me for letters. Donald, can you write a letter? And Darren knows about this. People say, Donald, can you write a letter to say I'm 100% owner of my business? What if I don't like you? And I say, I'm not writing no letter. I'm just joking. But no, I'm saying like that's why it's important to have those relationships because I can't tell you how many times I've helped somebody get approved for a loan. And everybody that I've sent to Darren at this point that has tried to buy a house, I believe, Darren, you correct me if I'm wrong, I believe we've gotten everybody approved that I sent your way.
Yes, we did.
Thumbs up.
All right.
I know what lenders are looking for, and I know when the wrong lender shows up, I'm like, I can't work with that person. You need to call Darren. It may take 3 months, but at least we're gonna get you there. But that's one of the key points about estate planning, having your documentation, keeping track with your documentation, making sure your business in good standing with the state to add that veil of protection as it's an LLC. And just keeping documented records, making sure your tax files are ready. Why? Because if something happens today or tomorrow, at least it can be passed down properly. Your intellectual property, those many apps that you're using, that you signed up for, that you paying monthly subscriptions to, making sure that you keep track of those. But this is important, a very important discussion about estate planning. And like I said, for the next session, we'll get into a little bit more deep discussions. And I'd love to hear from you if you have any particular questions or topics that you want to discuss. I don't mind adding it to the session. So thank you all so much. And I'm going to stop the recording and we can ask questions at this point.